Hello and welcome to Zee Commodity Capsule. Gold prices have taken a breather of nearly 18 to 20 odd dollars on Monday after having touched a record high of $3,655 an ounce in the previous trading session. That's on Friday. Even MCX Gold followed the suit and managed to post a record high of 1,07,807 rupees for 10 grams. The strength came on the back of safe haven demand. We saw weak US jobs report strengthening the expectations of an interest rate cut by Federal Reserve as early as next week. Gold futures currently is trading close to 36, 30, 40 odd dollars, which is just 20 odd dollars away from its recent record highs. Bullion prices jumped over 4% in the previous week, that's last week, and has gained for 9 sessions out of 10. Year to date, if you see, gold prices have managed to surge by over $1,000, and in percentage terms, it turns out to be 37 to 38%. Clearly, the strength is driven by safe haven demand due to President Donald Trump's trade policies and robust central bank demand. We have seen US jobs report showed a marked slowdown in employment growth and a rise in the employment rate to nearly 4.3%, which has bolstered the sentiment that Fed will deliver a 25 basis points cut at its September meeting, which is scheduled on 16th and 17th of September. That's next week. US dollar index, meanwhile, is holding below 98 mark. It's quite steady. Market watchers are now awaiting the upcoming US inflation report slated to be released on Thursday. Silver prices, meanwhile, we have seen are steady near $41.5 an ounce, falling below last week's highest level, which has not been seen since August 2011. Brent crude prices managed to surge by nearly 2% on Monday to above $66 a barrel, ending a 3-day decline after OPEC Plus agreed to raise output further, but at a modest pace amid weak demand prospects. We saw OPEC Plus announced on Sunday that it would increase production by 137,000 barrels per day from October, which is significantly smaller when you compare with the previous monthly hikes of 5,55,000 barrels per day in August, September, and 4,11,000 barrels per day rise for the month of June and July. Prices were also supported by expectations of tighter supply from potential new US sanctions on Russia, particularly coming after the massive airstrike that Russia has launched on Ukraine, striking a government building in Kyiv for the first time ever. Meanwhile, we have seen Goldman Sachs has slashed its average forecast for Brent and WTI crude for next year, which happens to be at $56 and $52 a barrel respectively. Copper prices in London managed to inch higher but hovered close to $9,900 a ton, buoyed by growing expectations of Federal Reserve interest rate cut after disappointing labor data strengthened the case for monetary easing, but softer demand in China capped the gains. Chinese trade data for August showed imports of wrought copper stood at 4,25,000 metric ton, which is down 11.5% on a month-on-month basis. China's soybean imports have risen to highest ever level for the month of August. We saw the Chinese buying nearly 12.28 million metric tons in August, which is up 1.2% from last year. Iced raw sugar settled near 2-month lows below 16 cent per pound mark. We have seen outlook for cane crops in China and Thailand remains favorable after good rains this year, while Brazilian cane mills continue to favor producing sugar over ethanol, which is creating a downward pressure on sugar prices globally.